There are 5 real estate tax secrets that might explain why Donald Trump won't release his tax returns. See, nobody likes to see somebody that makes a lot of money pay virtually no money in taxes. But what does this mean for you? Well, it means that you might also be able to take advantage of these 5 tax secrets that very few people actually consider when they're thinking, oh, should I invest in stocks or bonds or real estate or just put it all in a savings account? For Donald Trump tax strategy number 1, let's come up with a very simple example here. Let's say somebody gave Donald Trump a small building and he gave it to Donald Trump for $0. So that is, Donald Trump controls a building that's worth $100 million for $0. Now Donald Trump wants to sell it. Well, if he sold it in the public market, he would receive his $100 million, and then he might have to pay his taxes of, let's just say, 40%. That would equate to $40 million. But that's a lot of money in taxes, and there's got to be a better way. Well, one of the ways he might be able to save some money in taxes is by doing this. Let's say Donald Trump now transfers the ownership of this property into a limited liability company, and there are going to be 5 owners in this limited liability company. And let's just happen to say that the names of those 5 owners are Jared, Ivanka, Dawn, Tiffany, and Eric, but the names don't really matter. The point is, now 5 new people own this building that's in this LLC. The problem is, because this is a privately held LLC, it's going to be kind of hard for each of them to individually sell a piece of the property. So what's going to happen is the value of this building, even though it's technically $100 million, is going to get written down to, let's just say, $70 million. And the reason for that discount is because now it's a lot more complicated to sell off a piece. It's not as easy to sell 1/5 of the property. And so now, as a result of Donald Trump moving it into a little bit more of a complicated family LLC, each share is worth less, and Donald Trump is not paying taxes on about $30 million. Now he's only paying sale taxes on $70 million instead of actual market value for the building of $100 million, basically meaning he paid 0 taxes on $30 million of gains at the sale of this building. Writing the value of that property down by $30 million could save upwards of $12 million in taxes or more. That's only calculated at the 40% marginal tax rate. It's quite possible Donald Trump would have to pay a higher tax rate. Now, in case anybody's curious, this writing down the market value by $30 million because it's now in an LLC and it's harder to sell is something that's pretty dang unique to real estate. That is, you couldn't buy $100 million worth of Google stock and then write it down $30 million because anybody can go buy Google stock for market value. It's kind of like a commodity. It's very easy to trade. But it's not true of real estate. As soon as you put it into a complicated partnership, you could tell the IRS, it's worth less because it's in a complicated partnership. Darn, shouldn't have signed up for that partnership. Now let's go on to Donald Trump potential tax strategy number 2. Let's say Donald Trump gets this fictitious tower we're calling Trump Tower for $0, and now it's worth $100 million. That means if he were to sell it, again, he would have to pay probably somewhere around 40% in taxes on it, or $40 million. That is, he has a building that's worth $100 million. He is supposed to pay the government $40 million because it went up in value so much. But now, let's say he passes away before he sells it, before he ever gets the chance to put it into an LLC or give it to his children or whatever, he passes away. Well, all of a sudden, the government comes up and says, you know what? You held that asset, you passed away. We're just gonna go ahead and forgive that $40 million in taxes that were owed. Yeah, we'll probably make your children pay some estate taxes, but as far as that $40 million that you had to pay on that $100 million, yeah, that's gone. We just made that go away for you. In case anybody's curious, that's known as the stepped up tax basis upon death that you receive when you hold assets that have gone up in value. You die, and now their tax basis goes up to market value, and you don't have to pay taxes on the difference. The third Donald Trump tax strategy takes advantage of the fact that you don't have to pay taxes when you do a special thing in real estate. So let's go back and set up the example like usual. Donald Trump got this now valued at $100 million property for $0 from Mr. Drumpf, I'm sorry, he changed his name to Trump. And now owns this $100 million building. Well, now Donald might be like, well, great. I mean, I got this $100 million building. I could rent it out to people. I could do stuff with it. But you know what I'd really like to do is I'd like to be able to take some money out of this property. And so what can you do with real estate that's a lot harder to do with different kinds of assets? Well, you could do something known as the harvest. The harvest just means you refinance the property and maybe you get a loan against this building for, let's say, $70 million. And then you're gonna take that $70 million and you're gonna go buy another building with the $70 million. Well, that's $70 million that you could now basically do whatever you want with. You wanna go buy a Ferrari, another house, another building, you can do whatever you want with it. You can just take it out and just rub it in your face if you want to, is actually tax-free. Now, maybe tax-free isn't the right word, but the point is, at least to my knowledge, and I could be wrong about all this, remember that, when you refinance a building, there is no taxable event that occurs. In other words, you go to refinance a building that you own free and clear, it's worth $100 million, you take out a loan for $70 million, you're not taxed on that money. You can now go party or go buy other buildings or do whatever you want, and you don't owe the IRS a dime. Now that's known as the harvest, and I think it's just very important to clarify that yes, in theory, you could do this with stocks or bonds, but it's a lot harder to finance stocks and bonds than it is real estate. So real estate opens up this really unique opportunity where you can have a property go up in value, you could pull money out of it by getting a loan against it, go shopping for more real estate, but not have to pay any money on that appreciated value. As long as you don't sell the property, you don't pay taxes on it. Now let's go on to Donald Trump tax strategy number 4. Donald Trump gets the building for $0 from his father, and now it's worth $100 million. Well, now let's say Donald Trump wants to sell the property. Well, dang it, I said if you sell a property, you have to pay taxes. Oh, but wait a second. There's actually a special part of the tax code that is known as Section 1031 of the IRS tax code in the United States that is known as the tax-deferred exchange. And what this means is Donald Trump could sell his $100 million Trump Tower, then within a certain period of time, usually 180 days or 6 months, go buy another building and defer paying any taxes. So here's how that looks. Remember, if Donald Trump ordinarily sells this $100 million property and he takes $100 million of profits, obviously I'm not considering things like selling costs and other little things that will come off here. I'm trying to make it a simple example, okay? Ordinarily, Donald Trump would probably have to pay about $40 million if he sold this place for $100 million. But because he's going to take advantage of what's known as the 1031 exchange, he's now going to move that $100 million of profits or gains on the property, which is associated with a $40 million tax ticket, over to another building that's larger in value, let's say a $200 million building. And now that $40 million in taxes that he should have to pay by selling basically just gets footnoted with an asterisk over here so that in the future, if he decides to sell this $200 million building for a gain, then that $40 million tax would come due. But then he could also just do it again and essentially never pay taxes when he goes to sell a building. Just for clarity, that is the 1031 tax-deferred exchange, also known as a like-kind exchange. You could do that with houses, condos, you could do it with a lot of different things, but the point is you defer paying taxes to a future point. The problem with real estate is you could just keep defer as long as you're not cashing out of real estate. Now, the last Donald Trump tax strategy that he possibly uses is this, and the odds are he does because pretty much everybody does. If he has this $100 million property that he got for $0, it just happened, now he controls this $100 million property, he gets to tell the government, no matter what happens, that every single year he is losing $2.564 million doing nothing. literally for nothing, he gets to say, I have losses of $2.564 million. Now, obviously, you have to pay taxes on rental income, and there are other things that you could write off, like taxes and interest and all that other stuff that could wash off all the other stuff. Not trying to complicate things here. All I want you to know is simply by controlling this building, he could take a tax write-off of $2.564 million every single year for the next 39 years. And that's because of something known as real estate depreciation. In fact, in a 2016 presidential debate, Donald Trump was quoted saying, "I love depreciation." And now, obviously, we could see that maybe in the 2020 election, he might revise that phrase to, "I love real estate." Because the bottom line is, all of these 5 tax opportunities are massive shelters that are afforded to you by being a real estate investor. Now, I'm sure there are plenty of other crazy strategies to save money in taxes by owning real estate, but if you want to understand how to get into owning real estate, make sure to take a moment, check out the link below to my real estate investing course. You could use spring 2019 and get 18% off. You'll find over 340 lectures teaching you about all of the 10 years of real estate brokerage experience that I have about real estate investing. And you'll get to meet me in our private live streams where I can help you analyze your deals on real estate and answer your questions personally. Hope to see you there, and make sure to drop a like if you appreciated the 5 secrets as to why Donald Trump might not be inclined to share his tax returns. Note, they're a little complicated to explain, especially when the numbers get big, so imagine what the actual tax returns really look like.